Why they crashed silver on purpose. What is the real plan? This was never a market accident. What you are about to hear is not financial advice. It is financial reality. Watch this until the end, because the final part reveals what they don't want you to realize about silver. Because what just happened to silver prices was not random. It was not a coincidence. And it was not just the market doing market things. Silver did not crash by accident. Silver was pushed. And if you've been watching closely, if you felt that strange disconnect between the headlines and reality, if you've wondered how silver can be plunging on charts while demand for physical metal is exploding, then you already know something is wrong. Because when prices fall but people can't find silver in stock, when paper silver collapses but physical silver disappears from shelves, that is not a free market. That is a controlled narrative. And today, we are going to expose why silver was smashed on purpose, who benefits from lower silver prices, how paper silver manipulation works, why governments and banks hate rising silver prices, the hidden role of industrial demand, why this setup has happened before in history, what the real endgame could be, and what this means for you if you hold silver or plan to. This is not conspiracy theory. This is financial warfare. Let's begin. Part 1. The silver crash that made no sense. Let's start with the obvious question. Why did silver crash? At the exact moment global debt is exploding. At the exact moment currencies are losing purchasing power. At the exact moment central banks are hoarding gold. At the exact moment inflation is still eating savings. In a rational market, silver should be rising. Silver is both a monetary metal and an industrial metal. It protects against inflation. It is critical to solar panels, EVs, electronics, medicine, military tech. So, why is silver falling? Because price is no longer about supply and demand. Price is about control. Silver is not priced primarily in the physical market. Silver is priced in the paper market, futures contracts, derivatives, unallocated silver accounts, synthetic silver. For every 1 ounce of real silver, there are dozens, sometimes hundreds, of paper claims. This means banks can dump silver on the market without owning silver. They sell promises, not metal. And when they want to crash price, they flood the paper market with fake supply. This creates panic selling. Stops get triggered. Retail traders get wiped out. Price collapses. No physical silver moves. Only paper promises change hands. That is how silver is smashed. Part 2. Who benefits from a silver crash? Ask yourself one simple question. Who wins when silver is cheap? Not savers, not workers, not everyday investors. The winners are banks with massive short positions, industrial giants that need cheap silver, governments that fear monetary metals rising, institutions that want to accumulate quietly, the fiat currency system itself, because silver rising is a warning signal. When silver rises aggressively, it tells the public that money is being debased. Silver rising exposes inflation lies. It exposes currency weakness. It exposes financial system fragility. That is dangerous for governments. A rising silver price tells people, your cash is dying. So silver must be controlled, suppressed, smashed during moments of fear. This is not about profit alone. This is about narrative control. Part 3. The paper. Silver fraud. Let's break this down simply. When you buy silver on an exchange, you are usually not buying silver. You are buying a contract. That contract says, someone owes you silver. But here's the problem. Most of those contracts can never be fulfilled with real metal. If everyone demanded delivery at once, the silver market would collapse overnight. This system only works as long as people don't ask for physical delivery. That is why price is attacked on paper markets. It discourages people from wanting physical silver. Low prices send a psychological message. Silver is dead. Silver is boring. Silver is a bad investment. This keeps people away from the exit door, because the exit door is physical delivery. And the moment too many people ask for real silver, the paper market breaks. Part 4. The silver short positions that can't escape. There are massive institutional short positions in silver. This means large banks and trading houses have bet on silver prices going down. But here's the trap. They can't allow silver to rise too fast because their losses would explode, so they must control the price. This creates a permanent incentive to smash silver during key moments. When retail interest rises, when inflation headlines spike, when gold starts moving. When geopolitical fear increases, when silver breaks technical resistance levels. These are the moments when paper selling floods the market, not to reflect reality, but to stop momentum. This is not free price discovery. This is damage control. Part 5. Why silver is more dangerous than gold. Gold is a store of wealth. Silver is a store of wealth and an industrial necessity. This makes silver far more dangerous to the system. Why? Because gold can be hoarded and ignored. Silver gets consumed. Every solar panel uses silver. Every smartphone uses silver. Every EV uses silver. Every data center uses silver. Every military system uses silver. Once silver is used in industry, much of it is gone forever. It is not recycled efficiently. This creates a slow-burning supply crisis. So why crash silver now? Because industrial demand is rising faster than supply can grow. And if price rises too fast, industries panic. Manufacturers complain. Supply chains get exposed. Cheap silver keeps the machine running. High silver exposes shortages, so the price is capped. Part 6. Historical precedent. This has happened before. This is not new. Throughout history, monetary metals are suppressed when governments need control. In the 1960s, silver was removed from US coins because the metal was becoming more valuable than the currency. In the 1970s, gold and silver exploded when trust in money collapsed. In 2011, silver surged toward $50 and was smashed brutally through paper selling. Each time silver rises too much, the system reacts. Because silver is a truth meter, and truth is dangerous to power. Part 7. The real plan. Accumulation, distraction, control. So what is the real plan behind crashing silver? 3 things. 1. Accumulate cheaply. Institutions buy when price is smashed. Retail sells in fear. Strong hands accumulate from weak hands. 2. Distract the public. Crypto hype. AI stocks. Meme assets. Risk-on narratives. These keep attention away from metals. 3. Protect the fiat system. Rising silver, dying confidence in money. Crashing silver, Jack's illusion of stability. This is not about silver alone. This is about protecting belief in the system. Part 8. The silver squeeze. Fear they don't want. There is one thing the silver market fears above all else: a physical delivery squeeze. If too many investors demand real silver at once, the paper market collapses. This would cause exploding premiums, exchange defaults, supply chain chaos, price dislocation, loss of trust in futures markets. So price must be kept boring, depressing, unattractive. Silver must look dead so people don't want it. That is the strategy. Part 9. What this means for you. This is not financial advice, but it is financial reality. If silver is being smashed on purpose, then low prices are not weakness. They are opportunity windows. The system always attacks assets. It fears. They don't suppress useless things. They suppress dangerous things. And silver is dangerous because it exposes lies about money. Part 10. The end game. The end game is simple. Control the narrative until the system changes. Eventually, debt, inflation, and shortages will overwhelm suppression. At that point, silver will not move slowly. It will reprice violently, not because silver changed, but because trust in paper, promises, breaks. When that happens, there will be no time to react. Only those already positioned will benefit. The crash was the signal. The silver crash was not the end of the story. It was the signal. A signal that something is being defended. A signal that someone is trapped. A signal that the price you see is not the reality beneath. The real question is not, why is silver crashing? The real question is, why are they trying so hard to keep it down? Because whatever the system fights hardest is usually the thing it fears most. If you watched until here, thank you. You're one of the few who really wants to understand what's happening behind the scenes. Let me know in the comments what part shocked you the most. Stay awake, stay aware. This is Felix. See you next time.